So let's talk about technique versus psychology. Now, on the surface, would you say that one is good and one is bad? Would you draw that conclusion when I say technique versus psychology? What's your immediate thought? I think that that's kind of the natural tendency is to think, stick to the rules, stick to the technique, and you'll never go wrong, right? How do you invert that to being like technique? This could be the tricky part because what if your technique is bad? What if your technique is bad, but your psychology is good? Meaning, I have a gut feeling that it's going to do this. And in trading, we do want to get rid of gut feelings, but sometimes when we've been in the market so long, we have the time and the seat. We've seen it, been there, done that. We know when things are about to go bad or things are about to go good, right? So when you're focused on or you're cool with holding and feeling no pressure or stress, yeah, that's actually a really good comment, Nick. And I'm glad that you brought that up. A lot of times, and we've seen this just recently, we've seen it a lot in the hot seat sessions where traders will be just fine adding to their trades and they're just fine with continuing to add and getting into drawdown. But the moment the market turns in their favor, they close out. So they go down a 0.5% to make 0.10 and they close out. Is that technique or psychology? Answer could be both, dependent upon obviously the case in point. But in my mind, when I see that happen over and over and over again, it comes to more of the psychology, right? It comes to more of the psychology play here if I see that happen more and more often, right? So let me just kind of back up. Let me explain what I mean by technique. A technique is where we just talk about like your 0, 1, 2, 3. Don't trust it. The second time it touches, I'm going to wait for confirmation. I'm going to get in before the third time it touches. And then just like as we saw here, well, this was the third time it touched and it just got rejected and it got rejected hard, right? And so technique says, I'm going to get in for the third touch. It fails. Oh, I better get out. That's technique. Like, Haled says, is it can be trusted and verified. Technique is I'm going to play a W or I'm going to play an M or I'm going to play head and shoulders, right? That's all technique driven trading. So if we play the technique, we still have to focus on our exits. And that, unfortunately, is all psychology for the most part. Psychology driven is if we focus on the exits. And we talked a little bit about why exits are purely psychological. I'm going to probably say that this is what makes this trading with a zero take profit is a technique, but it is heavily dependent on psychology, trading with a zero take profit. If you had take profits on, it does help with the psychology of exit. And it does make this style of trading more difficult when all of your exits are based on psychology, right? However, if we trade with a zero take profit, we should not be cutting because of fear, because we should know what our technique is and trust the technique. And that comes with psychology with trust. Trust is a huge part of trading when you have a zero take profit. So it kind of comes around full circle. You have to develop the good technique. You have to get in the trade. Then you have to turn it to psychology to trust what you're seeing will play out. Then you have to know when it doesn't play out to get out. And that's technique. So going back to technique, that when the setup is no longer valid, you need to get out. And that's, again, technique. When you exit for profit or loss, it goes back to psychology.
So that means both of
And
them
then
go
and
hand
then you
in
do
hand.
it all over again, right? And it's a cyclical cycle. Every single setup, you play technique, psychology, technique, psychology,
So that means they
right?
go
And
hand in
just is
hand.
in that circle.
So that means they go hand in hand.
Absolutely. They go hand in hand. People tend to think that psychology is bad and technique is good, and you should always lean towards technique. Well, you need to marry the two together. And you either need to get better at your technique or you need to get better in your psychology. And it's usually one or the other that you're working on. It's rare that you can work on both at the same time because if you don't trust your technique from psychology, then you need to change your technique until you do. Right. But if you have back tested and understand, like I'm just going to say an M or a W, an M or a W is some of the most common plays that you'll see out there, and that falls under technique category. So basically, I'm saying if it's a solid M or a solid W, you should trust that. But then you have to ask yourself, why do I not trust that enough to play it? Or to play it, like what we just saw with Logan, he had all the calls. His technique was perfect in his head, right? Meaning it's going to do this, it's going to do that, it's going to do this, and the market did. And his execution was one trade. So was that technique or is that psychology that stopped him from getting more out of the market?
That was sound more like trust.
That was he didn't trust his own diagnosis or his own
Analysis.
technique, right? His own technique. He didn't trust it. And Ed's like, Ed absolutely is spot on when he says keeping a journal. Some people are journal keepers. I'm not a journal keeper. But some people who align themselves to journal keeping need to do it if you are an analytic trader that needs to see that hardcore evidence to support why your technique is good. You need to keep a journal, right? For me, whenever I'm trying to learn something, instead of journaling, I'll use a checklist, meaning, and I still do that to this day, but that checklist is more in my head than did the market do this? Check. Did the market do this? Check. Then I better do this. Did I do this? Check. And when I'm in a market like today, the market that we just traded in, was the market doing exactly what we thought it would do for the most part? Kind of zoom in a little bit. And we saw that happening because of our technique. We recognized that the market was giving us one price cycle up, one price cycle down, one price cycle up, one price cycle down, one price cycle up, one price cycle down. It broke out of the wedge here that we played in the very beginning, and we were in buys thinking that the wedge was going to pop to the top. It broke out, then played the price cycle game. Right here in this box right here is where you make all of your money. All of your money right here for the day. We think it's going to break to the top, but it's winding up, definitely winding up to break. And we think it's going to break to the top, and it did. But it still didn't give us the pattern of price cycle up, price cycle down, price cycle up, price cycle down, price cycle up until here. And now we see a pattern that is formed, and we know that it's coming up to here. So technique turns into psychology, where we trust that it's going to have follow through and come up to here. And if we trust that it's going to have follow through, well, now we can add more trades and take advantage of this situation. But until the market shows us that that's what's going to do, we have to stay light, because if we are heavy here, psychology takes over. And I don't care if you're heavy because you're winning or you're heavy because you're losing, psychology takes over anytime that you get heavy on your trades that's for you, right? And so today, in today's trading session, I gave Logan the challenge to stay within 10 trades, and you completed that challenge. Awesome. But if he had started out with 10 trades, psychology would have taken over and says, well, I can't do anything. I'm stuck in my trades, right? If you would have put 10 trades on right here, market comes up and you didn't get out, comes back down to here. It's like, well, I can't do anything. I'm in 10 trades. Well, that's psychology. Psychology says I can't do anything. I've maxed my bullets out. So I'm too heavy. I got to just hope and pray that the market comes back into my favor. Right? So going back to my circle over here of psychology technique, we're constantly moving back and forth all the time within our trading. And if we are not recognizing, this is the first thing that we have to do as traders is recognize this. If I'm getting into buys right now, is it psychology or technique if I wanted to throw a buy on? Because it came down so far, market's overextended. I figured it would come down to this point, and then from there, I don't know. But it rallied back up, came back down, and I'm looking at playing this W. So if I got into buys, it would be technique, right? Robin's like, nope, it's greed. You're right. So if I were to play buys right now, playing out this W, it would be technique, but I would not be treating it as a high probability because of where it's at on the chart. Meaning that this W is playing out really, really close to, if it breaks here, we could get a runner down. So I'd play with maybe 10% of what I want to enter into the market with right here. And if it breaks down, well, I got to get in and fix it on the break even. But once it crosses here, I secure it because that's what my technique says. Pops up, comes like this, I can get back in for a ride up to here because that's where I believe it's going. But I'm 10% of my trades here, and I'm probably 30% of my trades here because this is confirmation. So combined, I'm in about 40% of my early game right here. And then when it hits this, I consider this to be max profit. And that's all technique driven. It's all technique driven. But here is when psychology comes into play. How does it get to this point? How does it get to this point? Does it do this, which is what it typically does? Or does it go straight up? Well, it goes back to technique. I'm going to ask the question here to the class. If the market does this and crosses this W, goes straight up, what does technique say? What does technique say? We're in buys. So we're buying. So we're buying right here. We're playing the W, right? And all of a sudden you get the W break and it goes straight up and hits that. What does technique say? One of you guys got it right. One of you guys got it right. I'm going to say, Logan, new choice. Eagle, new choice. I'm talking about your exits. Right here is a PMW secure for right here. Prove me wrong. That's what technique says. Prove me wrong, because this is the first touch. Go ahead, market, and continue. But if you don't, I want to be out on a prove me wrong. And that's where you put your prove me wrong. Right? But it's a PMW secure. So it's not a secure at the 50. So that's why I said Logan need a choice. It's a PMW secure because the market typically doesn't do that, where it doesn't go straight up. And that's what we're talking about earlier, is like it's all context based, right? The market, if it's going to go up, will go up, come back, go up, come back, go up, right? That's what I believe is the normal cycle of the market. This is abnormal for it to do this. However, we all know that it does this quite often, just shoots up. How does psychology get us into trouble? Same exact scenario. The market shoots up. The market shoots up to this point, and psychology says what? Good point, Eagle. I will change my color and kind of thicken it up a little bit. Psychology says, yeah, exactly. It shot up. Ooh, that's a lot of, I love that. Keep going. Greed will say, keep going. Scarcity mentality will say, well, that it shot up, it's stalling, I need to get out. Scarcity mentality will close that. So there's three types of mentalities. There's greed, and it says it's going to keep going. There's scarcity, which could be fear that you're going to lose it all. So I'll just close out here. And then there's the kind of where it's kind of in the middle, where it's not greed or fear. It's, I'm going to wait and see. And then it pulls all the way back down to the 50. And you're like, well, I can't get out now because I want to wait. And next time it comes, they're all going to get out. And you start bargaining with the market. Next time you hit this, I'm going to get out. And that's psychology, right? Because it's like, well, you know, I had it, didn't take it. So now I'll wait for the next time it gets there. And what does it do? Well, it runs away. So that's why technique comes into play of no matter what it does, I have a secured trade right here. And if the market decides to come up to here, I'm going to secure it. I'll get out. And technique says, well, there's one iteration. And now I'm going to recycle. Right this second, it ran up. I'm thinking to myself, are we in a price cycle event where it goes up two, back one, up one, down one? And if it turns and goes back up, then yep, we're in a price cycle event. And now I'm in the money because I got confirmation that we're in a price cycle event. But if it comes and crosses this, that whole theory gets negated. Going back to how, the question is, we understand that psychology and technique play a huge part in our trading, right? And it's this circle where we got technique, psychology, technique, psychology. This is your exits. This is your entries. This is your what you're doing when it goes against you, your psychology. And then this is your technique if you have to fix them, or if it goes against you, or if it's in your favor, right? When the market runs, either way. And then back to psychology, which is your exits. And it's a cyclical cycle. Every single setup that you're in, it always plays out that way. So we looked at, Ed said, journal your trades. Well, how does, for those of you guys who are journaling, how does journaling your trades help you to recognize, am I making a decision based upon technique or psychology? And I will say there's a time and place for both, but as a level one or level two, your executions, when you pull the trigger on something, it should always be based on technique, meaning your entries should always be based on technique. Your exits should always be based on techniques of securing the trade when you can. There are times and place. There's exceptions to every single rule. There's exceptions in my trading. When I don't secure, I just close. And I like to secure, but sometimes the market's moving too fast for me to secure. Case in point on news, I did not secure anything when I'm trading the news. It's get in, get out, get done, right? So there's always exceptions to every rule, but as a general statement, anytime you enter a trade and anytime you exit, it should always be based upon technique. Psychology becomes a major factor due to position size. How does psychology become the biggest game changer and you ignore technique when it comes to position size? Yep. That basically MK says it blinds you. Not only does it blind you, well, it's kind of like tunnel vision for sure, right? You're blinded by it and you're in tunnel vision, but not only does it blind you, but you make mistakes in your execution, and then you're forced to have to go deeper and you're making mistakes. So some of those things could be like some of those mistakes to psychology when we make trades is when you feel like you don't, again, this is probably more for newer traders where you get in, you open up the market like right here. When you open up the market right here and the market is right here and you slap on sells, what is that? What is that? You guys know what that is, right? When you start to sell right here, what is that? What is that called? FOMO. Yep. It's also one of the things that we teach not to do, which is chase the market. Now, I'm a little bit hesitant on that because Ed would say smack in because it's momentum, right? But I would say smack in probably here for momentum. And here you're overextended. Anytime you're overextended in the market, you should not be in the same direction, right? And we're definitely overextended because it came all the way up to here, dropped it all the way over here. So we're overextended in the market, right? Another point to psychology is this is, I'm telling you guys this because as you do this in your own trading, you can check that box and say, was this because of psychology or was this because of technique? And that is a huge thing that you have to do and you have to master as a trader. And sometimes if you don't have like a mentor, this you got to figure out on your own in your own trading, it's hard to do. That's why a checklist and journaling really helps. And it's something that I had to do. And I had to keep asking myself over and over and over, why did I do that? Is that technique or is that psychology? And one of the things that we get it a lot is chasing the market or FOMO. That's the easiest thing. The other thing that I would say is more psychology than technique is that if you hold on to losers, okay, what about holding on to losers, right? When has anybody ever said, well, what you want to do here is you want to get into a trade and go ahead and take that down into a 10, you know what, let's go 20 pip loss. Let's do that. Let's take that into a 20 pip loss. And then the market's going to be nice and get you out. Right? What about that says technique? Holding on to losers. Now, this one's a more difficult one than stopping chasing the market or stopping the FOMO trading. It is extremely difficult to recognize that I'm holding on to losers because we want to believe that all of our trades will eventually turn and become winners. And as a good risk manager, you have to kick that belief system to the curb. You have to eliminate that thought process and say, you know what, trade, you have less than a 50% chance of being successful within my setup that I have going on. And if you're less than 50% chance of being successful, you got to go. And that's technique. Psychology is, oh my goodness, it's too heavy of a loss for me to take. Psychology says you cannot take that loss because it's too big and you'll never recover from it. Because if you were to cut this trade, once you recognize that it's no longer part of your setup and you cut it and you learn to cut it, it will eliminate the next thing, which is revenge trading. Now, revenge trading can come and mask itself into various different forms, but basically, revenge trading starts when you feel that you've taken a loss greater or you're losing greater than what your skill set can manage. Enter revenge trading. Revenge trading is the number one thing that is purely psychology dominated. There's no technique. There's nobody out there that says, you know what, when you take a loss, add more to your loss and get back, right? There's no technique in the world that's going to tell you to all of a sudden double or triple your position size because you're in a loss, right? And so it's a cycle that we start with, which is we get into a setup, that setup changes. We don't recognize that it changes. So we add more to that position. And then we let our losers run because we're like, hey, oh, and then we're like, oh, it's too late. The setup's changed. Here's the KPI. It changed. Well, I'm going to get out here when it comes back. Yeah, it didn't give me that. Well, now you mark it. You gave me a 0.5%. Now, keep going. Keep going. Oh man, I should have got out here. Who's been in that situation? Who's been there? Where we sit on our hands, the market comes back, gives us what we asked for, but it's still not enough, so we don't get out, and then it takes it away. Right?
All the time.
There is no technique in the world that says you should do that. That is all psychological trading. That is pure psychology trading, right? And not technique driven. So we come back to mastering the technique. Okay, Alfred. Touche. Touche. You're right. It is a technique, I guess. It's the losing technique. I love it. So everything about that says that if you go, then you have to go back to your technique. And one of the techniques that some of you guys needed to fix was, well, I get in too heavy too soon, right? We've heard that. I'm too heavy too soon, right? And so we fix that. And you're like, okay, now you got to sit. Now we fix that with early, mid, and late. It helped me fix my too heavy too soon because now I know what my early, mid, and late is, right? So now we're no longer too heavy too soon. The next thing is, well, now we let our losers run too much. And we saw that, and we kind of, I talked about that with Logan in the last thing, is like some traders, that's what I want to say. Some traders who struggle with letting their losers run don't play the iteration game, which is they'll get into the price here, it comes up and they don't get out. Market kind of flounders, it comes all the way back down. Well, I can't get out now because my break even was here and now I'm taking a loss, so I can't get out now. So I'm going to wait for the next time it comes up. And then psychology says, well, wow, that was a really good run. I think it's coming up to here, so I'm not getting out now. I'm going to wait for it to come up to here. Because yes, that is still what technique says, that the market should come up to here, but we don't know if the market is going to do it here. We don't know. But what we do know is that price is here. Price is here. And what you can do is take profit when price is here because you have profit. And that's what you do know. So by playing what you know, you're stacking in profit. That is what you should do. That's what technique says. Take what you have, not what you hope to get. Secure it because it could run. If it comes up to here and we secure it here, and if it comes back, we just kind of played the iteration game. We got knocked out. It came back. The only exception to not securing it is if this is goal. Now, goal could be a goal for the day, which is what we generally talk about. But if you're in drawdown and you're trying to recover from a 1% loss, your goal is I want to make a 0.5% or even a 1/4% to drop this down to 0.75. That's your goal. You take it at goal, right? Your goal is no longer, I got to make 1% plus a 1/4 to hit my goal for the day. No, you're in a drawdown. Your goal is to chip away at that drawdown and you take it at that goal. So if the market does this and says, okay, you know what? It just did this. Here is my secured event. You take it at your goal and you get back in. Right. So goal can have two different meanings. Goal can be what you want out of the market for profit, and goal could mean what you're trying to chip away at being down. And you set the goal as a trader. Like, what do you want from this move? And I've said that a couple of times in our hot seat session. What do you want from this setup? Do you want to hit goal, or do you want to take a 1/4% of your goal, or a 0.5% of your goal, or, you know, just a little bit of your goal? What do you want from that setup? And then take what the market's giving you, right? And so there's an evolution here between technique and psychology, and you guys can start to see where psychology and technique intertwine, but you do need to separate them. You have to have distinct separator points. Is this technique or is this psychology? Because of technique, or am I putting on a trade here because of psychology? And we need to start asking ourselves that question so that we can separate and have two distinct outcomes in our trading. There's a place for both, and you need to have both, but they need to be in their own placements, right? This is technique, this is psychology, right? And so we kind of talked about when psychology takes over technique is usually when we're in a bad position. When we're trading in a bad way, then technique kind of gets shoved to the side. And I would say that that is when you need technique the most, when you're in drawdown, right? Is when you're in bad trades is when you need technique the most, and you need to kick psychology to the curb. I would also say on the inverse, when you're up and you're winning, technique has a place, and that is to secure your trades. So I'm going to add a few more trades. That's purely psychological, because technique says, well, you probably shouldn't add here, but you're okay because you're up, you're winning, you're playing with house money, and you want to get some more. Right? That's what I'm saying, that when you're winning, psychology can kind of trump technique, but when you're losing, psychology has no place. But for whatever reason, I think we know the reason. It's the inverse for a lot of you guys. When you're winning, you cut them and you don't secure. And when you're losing, you let them run because of psychology. Right? And so what I'm saying, ultimately what I'm saying here is start to recognize every setup that you take. When you're done with that setup and you close it out, is that technique or was that psychology that you traded? That, ask yourself, was that technique or was that psychology? And only you are going to know the right answer. But be honest with yourself. Don't lie to yourself, because you'll know that you're lying. Any questions, any thoughts? I don't want to jump into anything else because I want this to just be short, concise, to the point. It's a lot different for everybody because we don't view the market the same. We have different psychological things when it comes to the market, that everybody's at different points. And so I'm trying to just give you a little bit of checklist or a guideline or a journal or things like that, where you can start to recognize, was this move purely technique driven, or was this move psychological driven? And only you know that. And then you can start to correct that. I mean, in Logan's thing, I think he mentioned when he placed a trade, I think he placed a sell here, he said that was him saying, I just want to be in the market. Right. And that was a psychological play. Right. And it was more psychological than it was technique. And he said, yeah, the technique says here to add trades. Right. It wasn't a bad entry because he had 0 trades on, and I wasn't going to get after him for that. But he made that entry from more psych driven than technique driven. It wasn't bad, but it was more heavy psych driven. Right. And that's what I'm talking about. When you get to the point like Logan did say, where he's recognized market structure, KPIs, all that kind of stuff, then you're fine tuning it. This was good, but this is better. But you have to go through the iterations and butts and seats to be able to eliminate the good or the better, right? Eliminate the good so that you can have the better. But if you're still struggling with those, I let my losers run, I get drawdown, I can't hit my goal, and you're starting to have those conversations with yourself, then you need to go back and figure out, am I holding to the technique, or am I letting psychology trade instead of technique trading, right? All right. Any comments, questions, thoughts before we kind of close up shop here? I love it. Eagle says, cutting trades, that you've been doing that has been super helpful. If you have not mastered the art of every time you hit an X down here, in fact, I don't know if you guys know this story or not, but honestly, the invention for me of trading with a zero take profit was that I hated hitting that X. Every time I hit an X in my trades, it was a psychological event. I hated hitting it because I would trade with the take profit. And it came to the point that it's like either hit my take profit and I'm happy, but if I have to hit the X, that means something bad has happened. And I trained myself to think that way, where it's either going to hit my take profit, get me out, but if I have to close it, it's because something bad has happened. And I hated hitting that X. I really, really hated it. I hated it with a passion of closing a trade out because I taught myself that every time that happened, it was a negative event. And so I'm like, well, how can I learn to love to hit that, to close my trades? Well, start trading with a zero take profit. Now I'm forced to hit that X to close my trades for money. And it immediately changed my psychology around. And I enjoyed hitting that X, and I was able to take it into the next stage, which is I'm all right or I'm indifferent. Oh, emotional tie to cutting a loss if I need to. I don't care. I don't have an emotional baggage to that trade, so I don't have to hold on to my losing trades. And then I came up, the next evolution was, if you're less than 50% of being successful, you got to go. I'm kicking you to the curb, right? See ya, wouldn't want to be ya. And I have no emotional connection to that trade. And it is ever since I've learned how to do that or taught myself how to do that, cutting trades has saved me and even made me more money because now I'm only dealing with trades that I want to deal with, right? All right, last question, anything, right? Good sermons. Preach. I love it. I should get a backdrop of a church when I teach. We are gathered here today to witness the unfolding of unlikely events of Eagle cutting his trades.
Hallelujah.
Cut it. Cut that trade. I demand you to leave this chart.
Oh, good
Cut
Lord.
your trades.
Oh, good Lord. Us now.
All right, guys. With that, I'm going to leave you alone with that.
That was fun.
Hopefully you'll learn something. All right, guys. We'll see you guys in the morning.
Later, Dave.
Thanks, guys.